Good morning, everyone. This is Gail with Traders Help Desk, and I've had a lot of questions about the differences between like the touch brackets and the call spreads. So I wanted to show you my trade from Friday, and it was on the Nasdaq. And I'm really not going to go through the trade setup. There's a lot of details on the trade setup that was formed, and I'm only using a 6 hour chart with a 60-minute chart. But I wanted to show you the differences, okay? Number one, if you look over on the 60-minute chart, you can see I've got two bright red lines. The first bright red line here on the 60-minute chart is a call spread, and that corresponds to the first green line. And then you have the bright red line here that corresponds to the darker green line down here. That is your touch bracket. Now, one of the reasons that I was watching this area is because this has been a strong resistance area. You can see that more or less over here on the 360. It has come and it has tested this area 4 times now, and each time it has failed to go higher. Okay, you can see these two magenta lines here that highlight the last highs over here. So I was expecting this to go down. Now this was around 6 o'clock in the morning. Now, you could have done a call spread, okay? It was $131 a risk, and the reward was $269, okay? Now, here is the biggest difference. In order to have made that money on the call spread, and this was a daily call spread that expires at 4:15, you would actually have to be watching the market and exit when it went to the bottom of the call spread. It would actually need to go below the call spread to actually get the best premium. Whereas on the touch bracket, okay, it had more risk. It had $212 of risk with a reward of $388. But here's your difference. On the call spread, the moment that it went to this line, in other words, the indicative index was at 76.65, you exited the trade. And that is the difference. Call spread, you would have to be monitoring it. If it goes below this and then suddenly pops back up, you would lose your profit, okay? However, on the touch bracket, as soon as it touches it, the trade is exited. So, and you could have done both. I mean, there was nothing wrong with doing both. On the call spread, your risk to reward would have been for every $1 of risk, you made $2.05. On the touch bracket, for every $1 of risk, you made $1.83. The difference is, okay, you would probably have to monitor this call spread, okay? On the touch bracket, you did not have to monitor it. If it swooped down and went below or touched this line, you're out. The call spread, if it came down, touched it, and then went back up, then you would have lost whatever profits you had made, okay? And again, it depends on expiration value. So that is something that you would need to monitor on the call spread, whereas the touch bracket, you do not have to monitor it. Now, I wasn't going to be around Friday, but I did anticipate the market was going to go down over what I was seeing. And as you can see, it went straight down, okay, came to the overextension, which is 20, and then it started bouncing back up. I had already collected my profits, and because Nadex is available on your iPhone and iPads, then you could simply monitor this from wherever you're at. So I just wanted to take a moment to actually point out what the difference between a touch bracket and a call spread is. And to learn more about these setups, you can actually subscribe to my coaching sessions, which are, I think, on special right now for $7.95 through Monday. Or you can also sign up for one of the trading packages and just add on the coaching as well. Also, don't forget to subscribe to my channel to receive more of the videos that I do.